Let's start with the stock of the day, and that is Car Group. I think the context is important here. Down by 30% over the past year. Today, though, it delivered revenue and earnings growth in all of its key markets in its half-year results. Net profit rising 16% to $143 million for the half year. Reported revenue up 8% to nearly $626 million. Investors getting an interim dividend of 42.5 cents per share. That's up 10% from the same time a year ago. The firm has maintained its full-year outlook of 12 to 14% pro forma revenue growth. Citi says Car Group saw a relatively slow start for the year for used vehicle sales in Brazil, but it has the firm at a buy with a price target of $39.65. RBC Capital Markets says results are in line with expectations, a good thing for the broker, which has a $41 target price on the stock. And just as well, we had one of our regular viewers, Joseph, wrote in last week, so before the results, and put this question to our panel. He says he's a big fan of the show. Why, thank you. He's wondering about Car Group, current valuation, earnings outlook, competitive position, and any key risks or catalysts you see in the next 12, 24 months. He's interested in perspective, at current levels. Thanks, Joseph, for writing in. So we've bundled a lot into this first stock of the day question. The market's rewarding the company today. Shares are up by 9%. So does Car Group look like a bargain now?
It actually doesn't look bad. So Car Group's a company that Teaminvest has covered since about 2013. So we've known it and followed it quite a long time. In earlier years, they did take on a fair bit of debt, which they've now started to pay off. So they've got their debt under control. Their return on equity over the last couple of years has been a little on the narrow side. I mean, 10% is not bad, but usually would like something a little better than that. But now where we're looking at from today's point of view, you've got the debt under control. It looks like they're reporting on some good returns, and hopefully they keep that up and keep growing, because other than that, it has been a really great, stable business. It has a great growth rate. They keep making profits, and right now the price is, I wouldn't say a huge bargain, but it's at the lower end, so it's pretty reasonable at the current price to get in if that's a business that you'd want to carry on into the future.
So that's a buy?
Yeah, at this price, that's something I'd be willing to buy.
Okay. Car Group was taken out of the portfolio, the fantasy portfolio, for a while back now. I'd say maybe even 4 or 6 months. Mm-hmm. Is there further upside to come in Car Group? Can it reclaim its perch?
Payday?
Yeah.
Look, we're talking about one of the top 3 old techs in our market, and they are very good old techs. We're talking Car Group, Seek, and REA. Look, in Australia, the biggest religion is property. REA gets the premium on that. But it's amazing how an economic cycle and a few policy changes suddenly and competition turning up changes the dynamics dramatically. I think all 3 are phenomenally good businesses, but the cycle is against them. It's hit real estate and Seek earlier than car sales. I think it's held up better, and that kind of makes sense. But the cycle is a cycle. I've seen this in so many different sectors where the weaker ones, because of the cycle, he gets hit first, and then eventually the cycle drags the rest of the sector, right? Look, I think it's a great business, but I don't think you need to be there. I mean, the multiples are high. There is going to be competition. We were initially looking at the tech companies, especially the software online businesses, owning the world. And then AI came, and AI was going to own the world. Then everyone realized, wait a minute, there's a bit of a Highlander problem. There can only be one. You can't everyone own the world. And that's started to challenge each other. And the dynamics will happen and play out. It's nothing to do with the economy per se or the business model. It's just what the market is willing to pay. Right now, the market doesn't know. The market is downgrading its growth, what they want to pay for growth. And that's going to hit them. So this is one I am looking at. I'm looking at all 3 of them.
Yeah.
I'm really interested in all 3 of them. It's just a question of when does the macro turn for them. I think there's car sales. Car sales. I keep going back to all.
Car Group, yep.
Car Group.
Yep.
Car Group is the laggard in the pullback compared to the other two. So I think there's more to play out. But yeah, I am waiting on this. I think if you're there, if you've been there for a while, you probably don't mind because you probably had the run up and you've given up some, and it's always the case. And right now you're basically betting that. It's funny how the brokers have all the target price near the highs in the previous cycle, which is what you expect. So I think that's a bit overestimation. I think they could come back, but I think it's going to take a bit of time. I don't think you need to rush in. I'm not getting into any three of them at the moment, but I think it's a high quality business. I'm waiting for the right level, and that's not today.
Okay, thank you. I hope that answers your question. So that is a buy and a watch list, or a hold if you're in it